The debt ceiling has been increased, and we have not seen strength in the market like this since April of 2021. So we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the bonds, the VIX, and the dollar. All right, so without further ado, let's get started with the video. So number one, Senate passes the debt limit bill, staving off a calamitous default. All right, so the final vote on Thursday night came after leaders put down a revolt by some senators who raised concerns that the debt limit package would underfund the Pentagon. So basically, the agreement suspends the $31.4 trillion debt limit until January of 2025, allowing the government to borrow unlimited sums to pay its debt and ensuring that another fight will not occur before the next presidential election. It sets new spending levels that will be tested as Congress begins to write its annual spending bills. Other policy changes on energy project permitting and work requirements on social benefits were also included. This is very important, good news for banks, especially the Russell 2000 and the IWM, right? So if we look at today, we can see that the IWM, the Russell 2000, is up over 3.5%. The NASDAQ is not up that much, and the SPY was obviously pulled up at 1.45% because of the strength in the Russell. So because of this news, the Russell skyrocketed above all of its we completely obliterated this entire range that we were building since the middle of March, and we also filled the gap from Thursday the 9th of March. So we filled everything, we gapped up, and this just skyrocketed upwards. Because of this news, it means that banks can now continue to borrow. The government essentially is not going to default on everything. So it's really, really good for banks. It means that banks will be able to make more money. That's it. So the Russell 2000 has a lot of banks in it, and the Russell 2000 is known to have economically sensitive stocks within it. So when the economy, or when there's good things that will happen for the economy, the Russell 2000 gets affected by it. So because of this news, that's why we see the Russell just skyrocketing here. So my point that I was making in the beginning of the video was that we have not seen strength like this since April of 2021. I was also talking about it on the stream today. So what I want to do is show you guys a chart of what the similarities and the differences are. So right now we can see the S&P 500. Before I go into detail about like the technicals and everything, what we see right now is this is the Bollinger Band indicator right here, right? So these two blue lines, it's the Bollinger Band. We are very overextended outside of the Bollinger Band. We opened and closed outside of the upper level of the Bollinger Band. So this is extreme strength, okay? It doesn't automatically mean that we're going to continue, right? Because oftentimes, other times when we have opened and closed outside, for example, on April 3rd, there was eventually a pullback. There was a pullback right afterward. You could just look at you could put the Bollinger Bands on the chart and look at every single time the SPY was trading outside of the Bollinger Bands like this, and you will not find an instance. So the only instance where we were trading this far out without getting a pullback, because every single time that we've been trading very far outside of the upper level, we get a bit of a pullback. The only time that we didn't get a pullback was in April of 2021. So April of 2021, I believe, a lot of the news that was surrounded with April had to do with COVID and vaccines, and also it also had to primarily because of the vaccines and everything that was going on as well. So yeah, and also I think it had to do with the Senate as well. But yeah, regardless, this was the only other time in recent history, April of 2021, where the SPY was trading very far outside the upper level of the Bollinger Bands right here, and we never got a pullback. So I'm not automatically saying that we can continue going up, but this debt ceiling news is quite important for the market. Obviously, we skyrocketed up, but I just want to show you guys this one case because obviously the vast majority of the data shows when we are this overextended to the upside, we get some sort of a pullback. But to be fair, this is the one time in history where we didn't get an immediate pullback. The SPY was essentially acting like a tech stock that had really good earnings. We never got a pullback to fill any gap. We just gapped straight up above 400. So I'm not saying this is going to happen, but this is the first time we've seen strength like this in over 2 years. So it's important to realize that. And of course, if you guys enjoy the content that I'm posting and everything, please make sure to subscribe to the channel. Please make sure to like the channel and like the video as well. Your support really, it actually goes a very long way. Please subscribe to the channel. It really helps me way more than you guys will ever understand. So please do that if you guys enjoy the content. Thank you. Let's continue with the video. All right, so now here's the thing with the SPY. We came to this level of resistance absolutely perfectly today. We had a resistance level that I was showing yesterday at 428.86, and we hit a high today of 428.74. So we basically touched it on the dot. So this level right here was made back in June of 2021. So I initially drew this out back here when the market was essentially making a it was starting to consolidate a bit and then breaking above this high from back in June 2021 basically solidified a continued move upwards. So this was a very major important level of resistance. The SPY was at all-time highs over here, and it really needed to make a decision, and what I ended up doing was breaking above it. So not only did we break it above, it was acting as a level of resistance. When we came back down, it acted as a level of support and bounced off of it again. And then, we reclaimed it again. So this was a very important level. And what ended up happening today was we came and tested that level basically perfectly. And now the thing is that we're very overextended to the upside. So immediately, right, we have to think, okay, how much further can the market go up now that the debt ceiling is increased? We have to assume that we basically just have to trade alongside the momentum of the market and see how the market responds to this news. Now that the news is out, will all the bears basically just go away now, or what is basically going to end up happening? Essentially, the main things that we have to take into consideration now is above 428. The major level of resistance that we have is at 437. Obviously, there's patches of resistance above, right? There's the 430, of course, there's 435. But this level here, 437.78, is a major level of resistance. So similar to in between 421 to 428, we basically filled this entire gap within 1 day because the levels of resistance and support were not very strong in between these levels. So similarly, in my opinion, there's also a not that stringent of a resistance level in between this 428 to 437 zone. So that is going to be the next level of resistance. So obviously we now just need to see if the main thing is for a continued move up, we have to see if levels of support can hold. If we get a break back below 424 to 425 and we get a close below that level, then that would be very bearish. And essentially, so just imagine we get a big red candle Monday, right? Say, for example, we open up and we have a red candle like this. We close basically right at 426, for example. The bottom of the candle is at 426. There is no way that would be a bullish setup. You understand? So the next day afterward, heading into Tuesday, should also be bearish. And then heading into Tuesday, if we end up getting a close below 423, then obviously that's going to be a very bearish setup. This whole setup is going to be bearish. So that's essentially what I'm looking at. If 425 to 426 can hold a support, and if Monday is going to be a red candle. So that's essentially what I'm looking at heading into Monday and Tuesday for the SPY. Because once again, every other time in history, statistically, we have over a 95% chance that we get a pullback. But April of 2021 was that one instance where we did not, and it continued skyrocketing upwards. So it's important not to get blinded. It's important not to get blinded by a bearish bias, because if you do, then you're going to miss out on a lot of money to the upside. And just keep that in mind. Keep that in mind for the SPY. All right. So in other news, the put to call ratio dropped today as well. So we should see if on Monday the number gets updated as well. But we were looking for a reading of the put to call ratio above 1. And if it breaks above 1, then things should be bearish in the market. That's when we would start getting into shorts. But we see that it shot up to 0.81, and then it dropped down to 0.58 today. So clearly, it's not acting bearishly at the moment. Also, in other news, next week should be pretty dry in terms of news. There's no FOMC minutes or meeting or anything like that. We only have news at 10 a.m. on Monday. And then Tuesday, Wednesday is pretty dry. And then Thursday morning, pre-market, we have some news. So it should be a pretty fun week trading next week. And then earnings for next week as well. We have some economically sensitive stock. We have some healthcare stocks. We have some retail. We have some more retail and just economically sensitive stocks in general for next week. We got Dave & Buster's, Cracker Barrel, GitLab. We have DocuSign, a Neo Friday morning. So Campbell's. So we also have GameStop. So GameStop earnings Wednesday after hours. Hopefully, recalls are going to skyrocket up into the hundreds of percent. So I'm excited. Hopefully, GameStop does really well, and it'll make us a lot of money. So yeah, let's see. So now let's go ahead and take a look at the dollar, the VIX, and then tech. So there's some interesting stuff that I want to show you guys. So for now, this is the dollar, right? So the dollar held support. We clearly were, first of all, we know that the dollar has an inverse relationship to the market. If the dollar is doing very well, that means that the market should be falling, right? We know recently that the dollar was doing very, very well. We were consolidating at a level of support. Above here, at a level of resistance, we were made support, and I knew that it would not sustain itself, so we had a big red candle, right? Off of this big red candle, we held support and we bounced. So now we basically need to see if the dollar can continue going up. If the dollar breaks above these highs here and continues going up, that should be bearish for the overall market. All right, so there's that for the dollar. It's looking like it's making a bounce. It's doing what it needs to do for a bounce. Okay, cool. Next, let's take a look at the VIX. And I want to take a look at the VIX in terms of also where it was now versus where it was in April of 2021. All right, so the VIX, we also know, has a similar relationship to the dollar. So we know if the VIX is doing poorly, it means that the stock market should be doing well. All right. So basically, when the VIX is falling, it means that the stock market is rising. Okay. So what we're looking at is the VIX is it's starting to get very overextended to the downside in terms of the Bollinger Band, which means that the VIX should be setting up for a bounce. Okay. And if the VIX is setting up for a bounce and it should rise in price, that means that the stock market should be falling. Okay. So right now we can see that the VIX is very overextended to the downside. It's trading outside of its lower level of the Bollinger Band. Great. Okay. What I want to look at is what the VIX was doing back in April of 2021, when we saw that the SPY was also very, very overextended to the upside, right? We saw that the SPY was very overextended to the upside. I want to see what the VIX was doing. So right now we can see that the VIX is very overextended downwards. Back in April of 2021, we can see here that the VIX back here, April of 2021, was never that overextended to the downside as it is now. So the fact that it was not this overextended to the downside years ago, that the lack of weakness basically the lack of weakness in the VIX led to a continued strength in the stock market. So what we're seeing today is there is clear weakness in the VIX. So if there is clear weakness in the VIX, that just adds to a chance that we will get a pullback in the market. So keep that in mind. This is very, very interesting. The VIX was much stronger back in April of 2021 than it is right now. And the fact that it's much stronger back then means that it's extra ammunition for bears, basically. The VIX is very overextended to the downside here. And compared to what we just saw, it's very overextended to the downside. And usually when we get this overextended to the downside, it leads to a bounce. And once again, if we get a bounce, it is going to be bad for the market. All right, so that's that. Next, let's just quickly take a look at tech. All right, so we know that the NASDAQ did not get as much love today because most of the money was flowing into the Russell, right? But we made a new high on the NASDAQ. Let's just take a look at the large tech stocks. So Apple, for example, was very, very overextended to the upside, similar to the SPY. And it painted a doji candle here. So Apple is also a $1 trillion company. And when these $1 trillion companies are very overextended to the upside like this, usually similar to the SPY or the NASDAQ or the IWM, we get a pullback. So the SPY and Apple are both trading above the upper level of the Bollinger Band, which is very overextended. And it's leading me to believe that we get some sort of a pullback, not only because of the dollar, but also because of the VIX showing weakness as well. So what I'm looking at for Monday and Tuesday is basically we should get a bit of a pullback and then a continued move to the downside. But that is only if the SPY needs to hold 425. That's basically it. We could look at the rest of the tech stocks. There's not really that much to look at. The only stock that continued showing strength was Tesla. All the other ones were basically teetering at resistance. They didn't make new highs. Tesla continued skyrocketing up as well. So we see Tesla and Apple both showing an insane amount of strength because money was flowing out of the AI sector and the AI stocks, meaning Microsoft, Google, Nvidia, and AMD, and into Apple and Tesla. So things are very overextended now on Apple and Tesla and the SPY. Things are very overextended now to the downside on the VIX. So basically now, as long as the SPY can hold 425 to 426, I don't know. It will continue skyrocket. It will continue going higher as long as that level of support is held. If it's not, and if we have a red day, on Monday, and we're failing at this level of resistance, it's going to be very, very difficult for anyone to be extremely bullish heading into Monday and Tuesday. So my thought process is it would be very, very difficult for us to open green, first of all. If we open red, honestly, this level of resistance is very, very strong. We hit it perfectly on the button, and we need to see how the VIX and the rest of the tech stocks that are leading this, Tesla and Apple, are going to react. But overall, yeah, I mean, Monday night we should get a pretty easy understanding of where the market is going to go, especially with Tuesday and Wednesday. That's my thought process. Of course, statistically, things should get a pullback. But the one instance where we did not get a pullback was April 2021. And the difference of now between April 2021 was, one of them was that the VIX was not that weak. What we see today is the VIX is very weak. What we saw back then, the VIX was not weak. There was a lot more room to fall to the downside. And I hope you guys enjoyed today's video. I hope you guys, got something out of this. Of course, not everyone is right with everything. Of course, I could be completely wrong. But this is my thought process, and I hope you guys enjoyed, and I hope I made sense. And with that being said, I hope you guys have a spectacular weekend. Make sure to get a lot of rest, and love you guys. Take care. Have a good one.